800-951-0592. Joe and Jason on this Thursday, 1975 here on gold this morning, up 8. Silver's up 36 cents right now. I'm just going to, on the next break, I'll give you tomorrow's prices, assuming premiums don't go up and the spot price doesn't go up. I'll just say they're higher than where we're at right now. So $10 gold pieces, $11.90. Monster boxes of Silver Eagles. We can get them. And delivery time about a week, so not bad. 19,000 rolls of Silver Eagles, 765. By the way, the junk rolls here, all of junk roll pricing will be up tomorrow, unless somehow silver goes down like 50 cents or $1. They're going up. I just got new premiums, $half-dollar rolls. $265. I'm thinking probably tomorrow we're going to be it's going to be between $270 and $275. Quarter rolls are at $250, at least $255, possibly $260 tomorrow. And again, that's assuming there's not another update in silver. And then dimes right now, dime rolls at $125 at 800-951-0592. And like I said, when we get back from the next break, I'll give you an idea of the pricing that we're going to be looking at, as, again, the news of the day, the first of its kind. It was between China and UAE. France's Total was the one that conducted the trade. 65,000 tons of liquefied natural gas conducted in renminbi, and then China came out with a pretty serious statement about how they intend to use and flex their muscle in their new, what I'll just call the Chinese Energy Exchange for crude oil, liquefied natural gas, and coal. Expect more and more purchases in renminbis. That just means less people buying treasuries, which is obviously a huge problem when you got the amount of treasuries that we have to sell out there. And again, this is part of the box. This is part of what I'm going to say is the new global reset that is coming. You all know it's coming. You know, it's so funny. I'm getting texts from people that I know they're friends of mine, but maybe they're not listeners, or they're casually, hey, I listen once in a while, and they all want to know the same thing. What's going on with the dollar? What's going on with the banks? Should I buy gold? And I'm like, I've been telling you to buy gold forever now. And here's the reality. It's really simple. Should I buy gold? That's a simple answer. Everybody should own some. Everybody. Do you put all your money into gold and silver? No. I've been saying that forever. That's why I tell you, that's why my son comes on every week. You know why? Because you know what? The last place you want to do is put your money with the Pinstripe Bandit. That's why you call Joey at Northwestern Mutual. These guys are not a bank. They're not publicly traded on Wall Street. They hate, they're the opposite of Wall Street. This is why they're AAA rated, right? They're like insurance for your wealth on the financial side. At least you know, hey, they're not going to go under. You know, when all the bailouts happened in '08, you know the one company that didn't get $1 from any of it? Yep, that was Northwestern Mutual. 602-909-9048 if you want to get a hold of him. But think about this. India announced, I want to say, the last couple of weeks. It hasn't happened yet, but it's getting ready to happen. India says that them and Russia have now agreed to trade oil in renminbis. Right? And that's okay. So you're thinking, I'm sorry, and I meant rupees. Sorry. In India's currency, in rupees, right? So again, another one where, hey, that was a dollar trade no longer. a dollar trade. We've got the emergence of all of these BRIC nations. And it looks like these BRIC nations are growing, right? BRICS, Brazil, Russia, India, China, South Africa. Those were the originals. Now it looks like, and I don't know that at some point, I think they'll make a formal announcement at some point. But there definitely is a lot of cooperation with BRICS when it comes to the Middle East, right? Saudi Arabia, UAE, Qatar, obviously Iran. I'm going to throw Iraq in there. And also a lot of cooperation with African nations. And even in our own backyard, Honduras just threw out told Taiwan to get out of the embassy. Get out. Right? And I granted, Honduras not a big player, but again, what are they signifying? Hey, we're signifying solidarity, kind of with the BRICS. Brazil, and I think it was Argentina. Let me look here. I want to say it was Argentina. Yeah, Brazil and Argentina have entered into what they're calling common currency trades. And again, these were trades that were normally done in dollars. Yeah, in late February, they announced a plan for a common currency. They're calling it the SUR, S-U-R, for bilateral trade. South America is a big resource rich place. And doesn't that seem to be the theme of the BRICS? Okay, do you got commodities? You got oil? You got natural gas? Do you got iron ore? Right? Brazil, they're one of the they're behind us. Brazil's a big farm exporter. They export a lot of corn. Right? We know, right? Coffee, soybeans. Right? They do a lot of that. And we're seeing more and more of these commodity-rich countries unifying together and unifying in a way that says, hey, we want less dollars. We want less dependence on America. And at the same time, what I'll call the G7 banks. So think about, G7, that's the Japanese banks, the European banks, right? Our banks are all weak right now. We're vulnerable right now. There's people openly questioning Jay Powell right now. It's not a good thing. Confidence, remember how important confidence is and how quickly confidence can be lost. Put that gold and silver away before it happens. 800-951-0592. We'll be back after the break. Joe and Jason, we're back. Jason's working on some technical issues, so you may just get more of me for the next little bit here, but I want to make it clear where the blame lies, and it's squarely at the feet of the Federal Reserve. And let me explain why the risk is not gone, because they want to tell you, okay, hey, we're okay, the risk is gone now, right? We broke all kinds of rules and all kinds of laws to save it, and we spent about $1 trillion between us and EU, and everything's fine. Not even close. So what did the Fed do? Well, the Fed brought rates to zero, which you only do really. In the laws of economics, you're never supposed to do that, by the way. In the textbooks that Janet Yellen read and wrote, you didn't do that. But you brought rates lower during bad times. Well, we had one of the longest expansions ever after the financial crisis. But yet rates were still zero. And really what the Fed was doing was trying to tell everyone, spend your money, right? Be risky,
will reward you for the risk, right? So let's talk about mortgages. We've already talked about commercial real estate. What most people don't understand is the banks don't like to hold the mortgages. They don't. They rather buy their securitized debt obligations, and you can all understand why, right? It's cheaper for them. We're going to sell these mortgages to the insurance companies. We're going to sell them to the pension funds. And we're going to have this securitized thing off of our balance sheet. Because if we have the actual mortgage on Joe Schmuckatelli's house, we got to put that on our balance sheet. We don't want that on our balance sheet. But what most people don't understand is that's not risky for the bank as long as two things don't happen. First one being people stop paying their mortgage. That happened during the financial crisis, right? People stopped paying. Now that would be a problem. But in lieu of that, the only other way this is risky is if interest rates shoot up and shoot up dramatically. Well, we've gone from 0 to almost 5% in a little over a year. That's pretty dramatic. Right now, the risk on these banks, let me tell you what does that mean? That means anywhere from a 20 to 30% loss. And we know this because of Silicon Valley Bank, right? What did the FDIC have to do to get another bank to put their name on the branches so the depositors that they, basically said, hey, you got to stay here, had a place to go? Well, they had to, of the $160 billion in quote unquote assets, which are these securities I was just talking about, 90 billion of it, nobody would take. Now, why would nobody take it? Well, the answer is pretty simple, isn't it? That had to be one hell of a haircut. It had to be such a bad haircut that not even the central bank and the FDIC want people to know. The other 70 or 60 some billion, the other 60 some billion of bad, but I guess not horrible, the bank agreed to take as long as the FDIC took another 23% haircut. Okay, if you do that, I guess we'll take it. Which just gives you a ballpark idea that probably these banks are sitting on losses, best case of 20%. And Jason, why do I get the feeling that other 90 billion was probably going to be a 50% plus haircut? Because we know Silicon Valley was being really risky instead of just regular risky.
Well, according to the FDIC's rules before they changed them, 85 to 90% of all their deposits should have just gone away, except for whatever fire sale on the assets of the closed bank could have been put into their pockets. So yeah, I think you're right. I think 50%, 60% of all their assets probably would have failed with the bank. And I'll tell you, they can't do that, right? Because you let half the bank's assets go gone, boy, those Silicon Valley depositors are going to tell all their friends, and they're going to tell all their friends, and then it's going to just go completely ballistic in this country.
I'm going to just remind people, because you know what you think you know until you find something else out. The FDIC, the Federal Reserve, and the banks, especially the banks that were making headlines, that didn't fail. Because we know what happened to Silicon Valley Bank. They just didn't let you take the money out. They just said, nope, sorry. People were trying to take the money out on Thursday, couldn't get it out. They didn't close the bank till Friday. But banks like First Republic were telling people who are trying to get their money out, I'm sorry, we're only going to let you transfer $25,000 out. Well, could you imagine if you had $1 million? Do you know how many days it would take before you got back below the 250,000? You cannot be lazy here, folks. I'm just telling you, you cannot be. I know right now this week that, oh, everything's great. Listen, the next aftershock, we just don't know when, but it's coming. 800-951-0592. Patriot Radio News Hour will be back right after the break. Eight 800-951-0592. The $10 Liberty gold pieces. That's that old gold. We tell you, old gold's the best. It's the best. Why? Simple. Laws. Tax laws. You can buy it, sell it, trade it in any amount, and don't have to worry about a 1099 for me. You can come in here and drop $1 million worth of 20s on the ground. Right? Here's a check. Here's a wire. Have a nice day. You're on your honor. You come in with that bullion, anything over 10 grand. Think about it. We're almost at the point now, 5 ounces, and you're over the 10 grand. Don't even mess with it. Stay in the pre-1933 U.S. gold, and right now it's just so much less than 20s. $10 Liberties, 1,190. You get 2 of them. I mean, you're like $60, $70, $80 less than a 20. I told you I'd get you the premiums. It's not going to happen. They're just going up way too fast right now. I'm just telling you right now, unless there's a big down day tomorrow, prices will be up again tomorrow. My worry is that we're probably going to have another update tomorrow on top of prices going up. So get in as fast as you can at 800-951-0592. Just really quickly, jobless claims, 198,000. Nowhere close. That's not good for Jay Powell, right? They need big numbers so they can have an excuse to not raise rates. Besides, we're giving up on inflation. That did not help. Fourth quarter GDP was revised down, but only to from 2.7 to 2.6. Another number that didn't help that cause either, Jason. But we got the half-empty cup. We got a really an interesting show coming up on the half-empty cup that people may want to tune into, Jason.
We got Barry Jones, and he's a teacher, and I'll let him do his story. I don't want to ruin it too much, but he's an expert on JFK assassination, but it's much more than just watching an Oliver Stone movie, let's just say. So there'll be a lot more to cover, and Joe and I are going to sit back and listen to Barry Jones. This is one of the guys that one of our listeners came into 1360khnc.com, clicked on the contact, suggested that this would be one of the guys we should contact. They gave me the contact info, which makes it a lot easier if I can call these guys. And today is his day, and we'll see if he's good enough. We might have this guy regularly.
Well, always fascinating, the JFK assassination, that whole thing, all the questions, all the unanswered, right? The conspiracy theories, all that stuff. So if you're into that stuff, I think it's going to be a really good show. And we may even get some of the Nixon stuff in there as well, possibly.
Yeah, Nixon, Watergate, Lyndon Johnson. It'll go in many, many directions. It's if you like the stuff that Jason Johnson and Joe puts on, this is gonna be good.
Right. JFK gets assassinated, and all of a sudden the Great Society starts. Right. That's where we got food stamps. Right. The welfare state. I mean, this is really when people got hooked on being dependent upon the government. Isn't it, just ironic how that worked?
There are certain historical events that seem to trigger a further loss of freedoms in American society, loss of liberties, and JFK's assassination, definitely one of those. And I'm sure we'll hit we'll be hitting a lot of ground. We'll have Barry, I believe, for at least an hour and a half up to 2 hours of the half-empty cup of Joe. So it'll be good, man. It'll be good.
Yeah, I'm pretty excited about it because it's at least something different. We're not going to be talking bank crises. We're not going to be talking COVID, right? We're not going to be talking Ukraine, right? Just something else for us to to stew on and mull and get a lot of great history out there. Gold's now up 10, by the way, 1977 and rising. Patriot Radio News Hour. God bless. Follow Jason and I over to the Half Empty Cup.